What's going on, guys? We are going to get into how to play SoFi earnings for the upcoming earnings on October 28th, which is a Tuesday at pre-market. So just wanted to get into it. SoFi has obviously been down, and we will see if this kind of just continues to consolidate and stay in a range until earnings, which I believe will be the case. I do think that is best case scenario. Honestly, I would like to see it just consolidate on the lower end of the 20s, and then for earnings we get that big pop and then continue higher. I really don't like to see stocks going super high up prior to earnings. It kind of makes me lean more bearish because then things are more priced in. So I would like SoFi to drop some great news during their earnings call. And the thing about earnings is, yes, they can beat earnings and then sell off during the call. So we really need SoFi to drop some amazing earnings and then continue with forward guidance to be really good. Some things I saw on X I wanted to visit, and it actually kind of sparked the idea for this video. This guy says a small earnings play of $11,000, so obviously he has a lot of money. And he bought 50 contracts of the 25 call. Now, he doesn't have to hold this all till earnings of 1031. He has plenty of time to profit if SoFi pops, up and leading into earnings and then sell. But a safer way to play that, I'm going to show you guys. And then another thing I saw was a really good post by this guy, if you want to go check it out on Twitter. And basically, he just did a lot of DD saying that the fair value is around 32.21, which is an upside of 27%. And he has all his research in here. So as far as the long-term hold goes on SoFi, still a lot of upside. And 32 doesn't have to be where it stops. Obviously, we've seen crazy moves in this market with the quantum computing stocks who, those are running well past their fair value. SoFi could easily fly past $32 all the way to 40 and so on. Doesn't have to stop there. But yeah, I just wanted to point this out and check that out. And then lastly, I wanted to show this. So yes, this is a resistance flip. This should become support now. But one thing I did want to point out is the market doesn't have to make sense. They have machine algorithms, they have market makers, and if everyone is thinking that this resistance flip is going to be support now and they are trying to load up in this area, well, those machine algorithms will just send it lower to get people to stop out and sell. So you never know in the market. I know people are commenting on the video saying it's never going to 22, never going to 23 again, but never say never in this market. They like to mess with people's mental and get people to sell out. So I wouldn't be surprised if it actually dips below this just to mess with people. But yeah, I would love to eye the 22 to 24 range prior to earnings. I think that would give you your best risk reward to play earnings. Hopping over in the Discord, I posted a lot in here about SoFi. So we did have some dark pool moves happen on Friday, October 3rd. You don't know whether they're buying or selling, but given the sell-off, I would assume these are buys. So just wanted to throw that in there. Dark pool basically is just transactions that try not to make a public footprint. So these pools allow institutional investors to trade large blocks of shares without immediately impacting the market and reducing the volatility. So just wanted to share that. So coming up on 1028 pre-market, the expected move is 14%. This will be SoFi's largest earnings that we've seen. So you can see all the dates here. The expected move 6, 2, 3, 3, 3, 1, 5, 1, 2. This one's going to be a very large move. Now, I do remember SoFi typically popping on earnings and then selling off the following day. I hope with this earnings we see a pop and then a gap and go and just continue to rise well above $30 hopefully. So this is what they're expected to do. SoFi has been beating earnings every quarter since 24 according to this chart. So now let's get into how I personally think I'm going to be playing this earnings. All right, so given the implied move I just showed, we'll say it's about 15%. So we're playing off this current number. Now, we have a long month ahead of us. SoFi could be at any number going into earnings, but this implied move will still be the same. So let's just use 25, 24 as the rough estimate for this video. So good earnings and good guidance. They hop on the phone call and they have a lot of forward looking guidance with a lot coming for SoFi, and it's all positive. Then you could see about a $3 to $5 move up, putting SoFi right back at 30, and then hopefully the next day, throughout the day, SoFi continues to trade higher. Now, if they don't provide, good earnings, which I doubt that they'll have bad earnings, it's just all about the guidance in the phone call. And if it were to sell off, well, then SoFi comes down to roughly 21.80, which is a pretty solid support as well. Now, given this guy on Twitter, remember the 11,000 I showed you, there's a lot of implied volatility, and it's called IV crush come earnings time. And, sometimes you can be right on the direction and still lose money just because of the IV crush. So I'm going to show you how to play it differently. But here's what he had. He had 50 contracts at 223, his $11,000. And let's say SoFi's price can be from 19 to 32. October 18th is earnings. So if it were to go to $32, he would make about 24 grand. He would actually lose money if SoFi stays flat. He'd barely make anything even on a decent pop. So he's risking a lot to not make, he can get lucky and make 24 grand. That'd be amazing for him, but it's not the way I would personally play it. Now, earnings is always a risk. So for, people who aren't trying to take on risk, you're better off just holding those shares or buying in the money leaps prior to earnings if you wanted to, or you could just wait till after earnings and not even deal with it. But this is for people who have a little bit of a gamble in them and want to play and bank off these earnings. Now, there's a ton of different ways to play earnings. The way I'm thinking about banking on it is using the IV to my advantage and also the expected move. So I don't think SoFi is going to go down, but even if it does, I don't think it's going to go, much lower than 21.80. So that's why I'm thinking about doing a put credit spread 22 and 20. So basically, as long as SoFi stays above 21.61, I should make some money. Now, you can also if you have the money to do it, you can just sell puts. You could sell a couple contracts. If you wanted to buy SoFi at 22 anyway, you can make some money while the other side gets crushed on earnings. So that is something to consider. But let's say we do the credit spread and SoFi stays flat. I make money. If SoFi goes up, I make money. If SoFi moons, I make money. The only way I don't make money is if SoFi were to absolutely tank and get, pretty much under 21.80. And I would still not even lose that much money. So it's a good way to play earnings when you are expecting the IV to drop. And I kind of wrote it out here. So SoFi 25.24, expected moves around 15%. I'm leaning bullish. So you want to do the 22.20 spread. IV is obviously high because it's earnings. And the lower bound expected move is 21.50. So placing my short strike below that gives me a cushion. And then IV crushes by 25 to 30% after earnings. So I'll earn a premium because it's decaying. And, this is giving me a 75% chance of making money, which is pretty good in the stock market as far as options trading goes. And yeah, so that's what I have for the SoFi earnings play. Now you can also, if you didn't want to do that and you're thinking SoFi's going up no matter what, you would actually make more money playing the call debit spread way. If you wanted to, let's say, buy the one in the money and you're going to sell the 30. So you could make $348 if SoFi is above both strikes near expiration. So that's another way to do it. And this actually does help with theta and IV crush. You are going to pay a little bit more for the spread due to it being earnings week. The premiums are jacked up a little bit. But this is a better way than playing naked calls weeklies like that guy had. I would much rather play it like this if you are bullish. So these are two ways you can do it, and you're not as hurt by the theta and IV crush. So let me know what you guys think about that. That is pretty much it for this video. Two different ways to play earnings. Always safer just doing shares and not gambling on earnings, but I just wanted to show this. And then long calls like leaps in the money, that's another way to bank on it without getting like IV crushed. But Please like and subscribe. Let me know what you guys think, and have a good one.